A very, very happy Friday to everyone, and welcome to another edition of the DHN Crypto Podcast. I'm your host, as always, Wade Teamer. Listen, we can no longer claim to be early to crypto. July 18th, 2025 will forever be remembered as the day crypto went mainstream. Around 2 p.m. today, Donald Trump, our commander-in-chief, will sign the Genius stablecoin bill into law. Meanwhile, the Senate will be taking a final look at the Clarity Act as well as the Anti-CBDC Surveillance Act, and everyone is expecting those two bills to become law by the end of the week. This is truly a remarkable time to be in the crypto space, and like I led with, we're no longer early, folks. We here now. We in the thick of it, and things are about to heat up. The topics we are covering on today's show, guys, are going to solidify that. NASDAQ listed Thumbs Up Media has announced a $250 million investment into several altcoins, one of them being XRP. Stellar Lumens is about to become a DeFi protocol. Yeah, they released their roadmap for the rest of 2025. Comes with a number of upgrades, one of them being Protocol 23. If Protocol 23 succeeds, Stellar Lumens could be the fastest blockchain in the market. Faster than Solana, almost matching Visa, ladies and gentlemen. We got the details. And the Clarity Act, like we mentioned, Senate's looking at that today. If it passes and becomes law, it could also ignite the U.S. gaming market when it comes to gaming tokens. Because there's wording in the bill, and again, if it becomes law, this will be a matter of fact that excludes gaming tokens from being considered securities. It also includes NFTs and other Web3 incentives that we have been covering on the channel. So, can't wait to share that with you guys. And another story, it's kind of pressing, and I think we're going to start here because Tether is getting ready to end support for Omni, Bitcoin Cash, Kusama, EOS, and Algorand in September. Have to lead with this one here because I know a lot of you are holding Algorand. And if Tether is getting ready to leave Algorand, this might be cause for concern. We already know we are in the era of global stablecoin arrangements. We have been for quite some time. And I do not like to see major players like Tether getting away from blockchains like Algorand. But here's the kicker. They gave very specific reasons for why they are beginning to phase out or get away from these networks. So, getting into the story, Tether has announced it will phase out USDT support for 5 underused blockchains. These underused blockchains, Omni, Bitcoin Cash, SLP, and I'm not sure what the SLP is, Kusama, EOS, and Algorand. Now, to my knowledge, Omni, not familiar with. Bitcoin Cash was supposedly to be the payment layer for Bitcoin. Kusama was supposed to be the testnet for Polkadot. Haven't heard anything come out of EOS's ecosystem since I entered crypto. And they're supposed to be from Detroit. And then there's Algorand. They're alluding to the fact that Algorand is underused. It's not very active, as they're going to describe a little bit later. But they said USDT redemptions on these legacy blockchains will be completely discontinued on September 1st, 2025. Now, in a quote, Tether says the decision follows a comprehensive review of blockchain usage data market demand, and feedback from community stakeholders and infrastructure partners. While these networks played a foundational role in Tether's early growth, the volume of USDT circulating on them has declined significantly over the past 2 years. So they're saying that usage of Tether on these particular networks has declined in the last 24 months. So if we really unpack that, what is it telling us right now? It could indicate the fact that there is more USDC based adoption on a network like Algorand in particular, because I don't think this indicates a reduction in on-chain activity for these networks overall, because we just heard a couple weeks ago Algorand partnered with Wormhole and now they're multi-chain. So there's definitely some activity over there. I found this to be compelling though, because you have to understand Tether has a lot of data. Tether, if anyone has the most data on any of these networks, it would be Tether. So for them to make this move based on their findings, it's very telling. It's very telling, guys. Let's finish this out here. Tether CEO Paulo Ardoño said in a statement that Tether wants to stay relevant and efficient as the industry continues to change and grow. Ending support for older blockchains gives Tether the ability to focus its time, money, and technical resources on networks that are more active, scalable, and widely used by developers and users. This is also implying that they don't see a lot of activity on those particular networks. And again, Tether has sort of an all-seeing eye, to be quite honest with you. And if they have come to the conclusion that those networks are not generating the output that they say they are, then that is very concerning, especially in the case for Algorand. Now, of course, more research needs to be done. You can dig a little bit deeper. We can look at on-chain analytics. But at the same time, folks, I have come across many instances where these on-chain analytics are not real. So I hope that isn't what we're going through right now. But I want to add this bit here, because Tether has pretty big plans for Bitcoin and the Lightning Network. But to finish this off here, the company plans to expand support for Layer 2 networks, including the Lightning Network and other emerging blockchain offerings, improved interoperability and speed. So, one, they're again pointing at the fact that those chains don't have the improved interoperability and the speed that they're looking for. Tether has quite a lot of demand. So if they deem those networks not capable of handling their output, again, it's very telling. Now, the second bit of information here is their approach towards the Lightning Network. Guys, if you use Cash App, let me know in the comments if you've noticed faster transactions throughout the entire application. Because I think that is because they've implemented the Lightning Network, and they did this behind the scenes. Jack Dorsey is still running everything at Block, which is the company that builds Cash App. They're using Cash App as the mainstream entry point for Bitcoin. And I can see somewhere down the line in the future, them adding other assets. If they stick with Bitcoin, that's okay. The point I'm making here is the Lightning Network is what will take Bitcoin to another level. And I just want you to be aware of that. Because yes, we cover a lot of altcoins in this space, and a lot of influencers will come at you telling you that Bitcoin is worthless, it's trash. That ain't completely true. You can also still make a lot of money investing in Bitcoin, even at 6 figures. You just have to know how to do it. With the integration of the Lightning Network, This means that other companies are about to implement the Lightning Network because it's been figured out. That was the issue in the past. The Lightning Network was a bit tough to implement. But one of the companies that we're going to talk about in a moment actually helped a lot of people alongside Jack Dorsey and Block figure out the Lightning Network. So keep your eyes on that, guys. Before we touch on that Bitcoin story, let's get back and talk a little bit of macro crypto. Donald Trump, his new plan could unlock $9 trillion for crypto and end taxes on small Bitcoin payments. Guys, this story is really shaking up the crypto space because if put in the executive order, if it goes through, we could now see 401k packages that allow us to invest in crypto, gold, as well as private equity. This is a game changer, ladies and gentlemen, because it definitely establishes crypto as a long-term investment. Let's get more details here. According to a June 17th report by the Financial Times, the president could soon issue an executive order allowing 401k retirement plans to invest in crypto, gold, and private equity. Now, for those who don't know, 401k, tax advantage retirement plan, in which U.S. employees contribute a portion of their wages to an investment account. The new executive order is expected to direct federal regulators to evaluate and revise existing rules that currently restrict access to alternative investments. Simply put, guys, if everything goes the right way, the incentive to go back to work is definitely going to be a lot more tasty, because now there are more retirement options that you can benefit from, because not everybody is comfortable investing in the stock market. A lot of people aren't even aware money is going into a 401k. I have witnessed that, guys. I'm pretty sure there are companies I've worked for in the past that I have contributed to a 401k that I haven't even cashed in on yet. So keep an eye out for that. It actually happened to my wife last year. She got a check out of nowhere from a company she was working for a few years ago. That company went through a change of management, and in that process, they had to kick out some money. So that was very cool. But a quote here from Omar Kanji, partner at crypto venture capital firm Dragonfly, really puts it into perspective. U.S. retirement assets sit at $43 trillion, with $9 trillion in 401ks. If crypto just sees a 1% allocation from 401ks, that's $90 billion in fresh inflows. $90 billion, ladies and gentlemen. That would add nearly another $1 trillion in market cap. We just cracked 4. That would put us close to 5 in a very short amount of time. Now, obviously, realistically, nothing will happen overnight. And let's just say the executive order goes through. We could see a price reaction that resembles what they call a baked in move, where we'll get the price action for this activity months before people actually start putting crypto, gold, and equity into their accounts. Something else I have observed in the market. Now, in addition to this, and this is the one that I think will have a more immediate impact, Trump administration is exploring a de minimis tax exemption for small crypto transaction. The move would remove capital gains tax obligations for minor purchases made with digital assets like Bitcoin. So this basically means that if you're a small time investor and you're only moving about $100 to $200, maybe $300 in crypto a month, whether you're trading or investing through a centralized exchange like a Robinhood, Coinbase, or Uphold, anything under $600, you're in the clear. You're in the clear. And that's going to alleviate a lot of pressure on people, because up to this point, it didn't matter how much crypto you moved, you'd have to report that on your tax return. Now, with this proposed rule, it would add that $600 rule that is already in the world of cash to the crypto space. So that's further making crypto a lot more familiar to people by implementing traditional instruments and ways to get involved with the space. Donald is doing everything that he said he would in relation to crypto, and it's truly fascinating. It is truly fascinating, and it's having a bit of a ripple effect, guys, because this story here, Wyoming tests use of state-issued stablecoin for contractor payments. Wyoming has been at the forefront when it comes to state-level blockchain adoption. Their Wyoming stable token, we first heard about this earlier last year. We speculated of a number of assets that the stablecoin could end up working with, but as it has been announced Thursday, the state teamed up with blockchain startup Hashfire to use the stablecoin through the company's document authentication protocol, which is built on a custom Avalanche blockchain. AVAX got the dub. Literally. AVAX got the dub, ladies and gentlemen. And when they say built on a custom Avalanche blockchain, these are the subnets that I was referring to. I started covering Avalanche for this very reason. I knew this subnet architecture would bear beautiful, beautiful fruit. And that is exactly what we're seeing right now. So, Hashfire is using Avalanche's technology through the form of the subnet to facilitate payments with the state of Wyoming's stablecoin. That is what we're looking at here. To take it even further, they plan on using the stablecoin for government payments, government employee payments, state contractors, things like that. So people who are working in public service on behalf of the city or the state, there's an opportunity they could get paid in stablecoins. Now, this is something that has worked in the past, not here in the United States, but the number one example I can think of off the top of my head is the arrangement built on Stellar, where the Ukrainian president is receiving a portion of his salary in Hervania. So the model works. Now, Hashfire said in a post on May 22nd that it was launching a pilot program using the Wyoming stable token to pay vendors. So this was the initial testing. And they say this innovative initiative enables businesses doing vital work for Wyoming citizens to execute agreements and receive payments instantly, boosting liquidity and working capital. I have to propose this question here before we leave this story. With the ISO transition taking place on the 14th, I have to ask you guys, have you noticed any changes yet? Faster payments, quicker interfaces, maybe you've received some letters in the mail saying, or maybe even emails saying there would be changes to your bank. I'm curious when we'll start seeing that. I haven't personally seen anything yet. I do know I was paying some bills that day, and some of the websites I had to go to make payments were a little wonky. They were a little bit wonky. But I'm interested in seeing when, in noticing when we'll realize this. Now, it was also reported in August that Wyoming was developing its own US dollar-backed stablecoin for consumer payments. They say that this will provide a faster and cheaper way for individuals and businesses to transact, which will create a new revenue stream for the state and may serve as a model for stablecoins at the federal level. So, at the state level, Wyoming seems to be ahead of the pack here. And if they figure out a way to make this work, You can guarantee other states are going to be doing this. So the question you have to ask here is, what would your state need a stable coin for? I can imagine here in Michigan, one of these auto companies looking into stable coins. Maybe to, I wouldn't say pay employees, maybe pay each other for parts, things like that. I could see that happening here in Michigan. Maybe in California, we'd start to see stable coins pop up around the entertainment economy, sports, the Olympics, even. We have the Olympics coming up in a couple years. Expect to hear a lot about stable coins, ladies and gentlemen. Whole lot about stable coins, if I'm not mistaken. Isn't that sucker in America? Friday, 2028. LA. I guarantee you we'll hear it. Okay? And we're making this prediction quite far out, yes. But I guarantee you, ladies and gentlemen, by 2028, the state of California will have a stable coin. And it will come from what the state of Wyoming did, the work that they did. Okay? What they proved could be done with a state-issued stablecoin. California will be next. Because in 2022, China did the exact same thing at the Beijing Olympics with the digital yuan. Same thing. They did the same thing. So, mark my words, ladies and gentlemen, and I guarantee you that sucker is going to be issued by crypto.com. Crypto.com, indeed. But let's jump forward to our next story, guys. Talk a little bit of XRP and USDC. I love the headline here, but you got to write it to bring people in, okay? Surely worked for me. NASDAQ listed Thumbs Up Media approves $250 million investment into XRP and other digital assets, right? Let's scroll down here and get the details specifically. So they have announced that its board has formally authorized the company to expand its crypto holdings beyond Bitcoin. So we have another company that was holding Bitcoin in their treasury. The company recently announced in a press release that it intends to make significant investments into XRP, USDC, Ethereum, Solana, Dogecoin, as well as Litecoin. Well, I guess it's still alive. In order to achieve a diversified $250 million digital asset portfolio. A couple things here, ladies and gentlemen. This is a multi-chain world, and this is a multi-chain game. This company is not just investing in XRP, but they're hedging their bet with a stablecoin, the leader in DeFi and Web3 and Ethereum, its emerging rival in the form of Solana, and a couple OG proof-of-work assets in the form of Doge and Litecoin. What could they possibly see coming down the pipeline for Dogecoin and Litecoin? That's my question. But we got a quote here from their CEO, Robert Steele, emphasizing the decision as it comes at a key moment in the crypto industry timeline. That is very true. He says, as the U.S. federal government moves towards more crypto-friendly policies and greater regulatory clarity, Thumbs Up is committed to remaining at the forefront of this transformative technology by diversifying our portfolio of crypto companies to gain wider exposure to the market as a whole. So dig this, y'all. This company is listed on Robinhood. And yeah, it's moving. And at this price point, $12.59, I got in. Not financial advice. This is just me. But I'm taking note of these companies as we find them. These publicly listed companies who are backing their treasuries with crypto assets. I'm definitely diving into those. There's another one, Diversified Investment Corporation. They have the $150 million Solana backed treasury. They're also listed on Robinhood. I think that is, and as you can tell about the price here, this is another safer route to get exposure to crypto as we go over the rest of this bull run. As we go through the rest of this bull run, if you want a safe route into crypto, there are a number of crypto companies that are publicly listed that you can look at. That's going to be my strategy too. I'm definitely leveraging crypto related stocks against cryptos. So right now I'm owning Circle, Coinbase, just picked this up, as well as the Diversified Investment Corp. There's another company called Applied Blockchain, works in the mining world. And then of course Hut 8, that was my first ever Bitcoin company stock. So this has been added to my stock bag, guys. Just wanted to add that in there. But this company is doing something else too that I found to be very interesting. So they have ties to the Trump family, but they're also working with players like PayPal, because let me go over to the press release because I have it highlighted here specifically going into what they do. So Thumbs Up Media is a pioneering and new era digital marketing and financial innovation company. Operates a proprietary platform that empowers users to earn cash for sharing branded content on social media. Payments are made via PayPal and other leading digital channels. In parallel with the growth of its ad tech, Thumbs Up has strategically expanded its treasury to include other cryptocurrencies. They are also developing a patent-pending lifestyle AI agent marketplace, which aims to revolutionize lifestyle planning. So this company here's got layers to it. Very interesting. Ad tech platform, AI. Now you're getting into crypto, social media payments through PayPal. This to me shows that the treasury was just the first step. We could hear a lot coming from Thumbs Up in the coming months, guys. But let's talk about their Trump connections. Trump Jr.'s investment in new crypto bills built momentum last week. The company announced Donald Trump Jr. had acquired 350,000 shares, an investment valued at $4 million. Trump Jr. and his brother Eric reportedly serve as advisors to Dominary Securities, which arranged a recent $6 million private placement in Thumbs Up Media. So, Thumbs Up, it's got backing. Thumbs Up has backing by the right people. And now they're looking to make a move into XRP. This also, guys, highlights a trend that we have seen in altcoin treasuries being set up. We reported on that yesterday. I like to see this because crypto is another financial instrument. I feel confident in saying and telling people now, you can build a savings in crypto. Be careful, of course, what you invest into. Make sure you download the starter kit so you are aware of the proper criteria for every digital asset. But now, crypto isn't just a reckless investment. Crypto is a bet on the future of the internet, ladies and gentlemen. So, very powerful news, guys. Coming up, we're going to dive into this Stellar situation. Look into their roadmap. Like I said, it was only a couple of days ago, one of you asked me, how could I get yield on Stellar? And at that time, I didn't have an answer because they didn't have one. No one had planned to implement that yet. But this roadmap just changed that, guys. Come on back.
Hey guys, I got a quick message for you. Let's say you're looking to buy some crypto, like the ones mentioned in this video. Consider using our crypto exchange partner, Uphold. With Uphold, you get access to more than 200 crypto assets through its simple-to-use trading platform. Uphold has been around more than a decade, so it is a name you can trust. With over $2 billion in reserves and $44 billion in trading volume, I've yet to lose a trade on Uphold. To the more experienced investor out there, Uphold also has a line of precious metals and national currencies for more diversification. For me, I'm having fun using Uphold's baskets tool. Uphold lets us set aside a certain amount of money to invest in different sectors of crypto. With one click, you can diversify into the big three, meme coins, or the financial assets like Hedera, Stellar, and XTC. But listen, crypto assets are very volatile, and it is always best to manage your risk and do your own research before using any platform. I recommend Uphold because before I was an affiliate, I was and still am a user. So if you use the link below, it helps support the channel. I want to thank you in advance.
Welcome back. Stellar Development Roadmap paves way for expansion and network scalability. Let me just jump right to the thick of this article. What we have to look forward to later on in the year is a series of activations, as they call them. First being the Stellar Web-Based Development Tool Lab 3.0. This will allow developers to experiment and test transactions, smart contracts, and APIs for the Stellar network. Actually, that will be upgraded. Well, I shouldn't say actually. I should add that will be upgraded from 3.0 to 4.0 by the end of the year. That is the plan for the roadmap. Now, these integrations here specifically focus on the developer side. They will include new additions to the Freighter wallet app, things of that nature. So maybe closer to the top of next year, we'll see that in the user interface. That will, over time, bring more people into the application, and we know the rest. But I want to get to Protocol 23. Because OG Stellar faithful, OG Stellar luminaries, we know what Protocol 23 is. There was another term for it a few years ago. It's called Jump Cannon. And it's coming later this year. Protocol 23 will feature a major transaction per second boost, which will see the projected throughput for Stellar reach 5,000 transactions per second. 5,000. Improved TPS significantly scales the network's output, allowing more parties to perform more transactions at the same time without congesting the network. Take a look at this. Listen to this if you aren't able to get to the screen. Compared to other major blockchains such as Solana and BNB, which boast max TPS counts of 2,900 and 1,700 respectively, the 5,000 max TPS goal would make Stellar one of the fastest blockchains in DeFi. 5,000 TPS, ladies and gentlemen. Now, I follow Tom Weller, which is the head developer on the Stellar network, and he's been talking a lot about Protocol 23. Once this kicks off, ladies and gentlemen, the Stellar network will be even faster than it is now. And it's pretty quick. This will also improve the finality. You guys remember when we talked about finality? Crypto.com recently achieved instant finality, one of only 15 or so chains out of thousands in the crypto space that can do so. If we read more into the documentation, and I'm sure Stellar will release it here soon, we should learn about how much this will affect finality on Stellar. Because if it reduces finality, and I think Stellar's was already at a 1.5 seconds. So if we can get it to instant, then Stellar's wallet ecosystem can scale as big as Solana, as Crypto.com, as Ethereum, as BNB. Because now, again, remember, finality has a direct impact on use case, user interface. If transactions per second are maxed at 5,000, finality is reduced to near instant. Every wallet application that is on Protocol 23 they're going to run just like a traditional banking app. They're going to run just like Chime, just like a Bank of America, a Chase, a Cash App. It will have Cash App like speeds. It will be capable of producing Cash App like speeds across all of its applications. We also have to look forward to specific DeFi protocols as well. As we can see here, alongside the freighter enhancements, Stellar Enterprise payments will also allow for the creation of on-demand single-use wallets. These can be useful for enterprises that are catering to non-crypto native audiences and simplify the process for receiving crypto-based payments. So if I'm not mistaken, that's similar to Cash App, to when you share your QR code. But there are other payment service providers who let you use a link. You can share a link and people can pay you through that link. As a matter of fact, I think a number of banks do it. A couple credit unions do it. My credit union does it. You can pay through the link. So this is similar to that arrangement. And again, if we're upgrading transactions per second, if we're improving instant finality, this is just going to make all of that run even smoother. It's going to make it all run smoother. So we have to keep our eyes open for when they'll publish this roadmap. But as it stands right now, guys, they're sharing a little bit of what we can expect from Stellar going forward, 2025, 2026. I really hope that they achieve this. I really do. Because DeFi on Stellar, imagine the implications for the MoneyGram access. Imagine implications for humanitarian aid. You're talking about yield opportunities in the world of RWAs. Because that's another thing. Stellar already has so much else. It has its tentacles in so many other sectors. An upgrade of this scale just boosts everything. It'll boost everything. To bring it back home and to answer the question in that email, just wait a little bit longer, brother. Someone will come along and develop a Stellar native yield-bearing application. I point that out because there's a little bit of a tangent here. This XRP5 phenomenon is starting to concern me. All right, y'all know I ain't gonna ever hold nothing back from y'all. But there are a number of companies now starting to promote XRP5. Let me tell you the core problem with this. XRP is not a proof of stake asset. All of the XRP that will ever be has been minted and put into circulation with the exception of what Ripple has. The problem is we don't know where these XRP are coming from. And in a lot of cases, the yield you receive isn't XRP. It's a copy. I hope that the setup on Stellar is nothing like that. I want Stellar to be in the background totally. To that point, what could this do for the Stellar DEX that we're all familiar with? And we already know on the Stellar DEX, you can trade things like gold, silver, platinum, palladium, and other currencies, other national currencies. I don't want to see a situation where a company pops up saying they're about to bring yield to Stellar when Stellar can do it itself. That's what I'm getting at here. Why would you add a manual override to an automatic transmission? That's my concern with this XRP-Fi. I'm still looking into it. Once I get to the bottom of it, you guys know I'm going to share it with you. But that was a bit concerning. And I'm hoping that this doesn't happen to Stellar, because the route that they're going with this roadmap indicates that soon it will be natively issued, yield can be natively earned on Stellar or through one of their approved wallets. All the more reason why that MasterCard crypto credentials is even more powerful. So with that, guys, let's jump forward. Let's talk a little bit of gaming, guys, as we get ready to land the plane here. Juice Gaming News reports Clarity Act could open the door for legal game tokens in the United States. I'm showing you guys the opening here. All right. Let's dive into the report, though. As we know, later today, the U.S. Congress is on the verge of passing comprehensive digital asset legislation, and it could have lasting impacts for the gaming industry. One bill in particular, Digital Asset Market Clarity Act, introduces language that directly excludes video game assets. Let me repeat that. Excludes video game assets from being treated as digital commodities. The change would finally give AAA studios and game developers the legal clarity they have long lacked when it comes to launching tokenized in-game assets. Now, we covered this quote from Robbie Ferguson, Immutable co-founder, on Wednesday. But if you missed that, he said the top 5 gaming studios alone have a combined MAU of 1.2 billion users, monthly active users of 1.2 billion. Now that the Clarity Act is passed, every major studio in the world will be empowered to launch a gaming token by the end of the year. In that same tweet, he also hinted at the fact that GTA 6 would be launching a token. He's been doing this for the last couple of months. If you know something, Robbie, tell us. But this also will magnify the in-game economy business model. We've touched on it before, some of the problems with the current model. The issue of crypto up front, crypto first, NFT first. You got to buy this first before you even see the world, before you even see the map. We've noticed recently game publishers getting away from that model and making the blockchain element optional. If the Clarity Act passes, when the Clarity Act passes and become law, this excludes those digital tokens, those NFTs, from being deemed commodities, which changes the perception of them as well. The Clarity Act, I'm reading from this here, legal line for game economies. The Clarity Act amends Section 1A of the Commodity Exchange Act to define a new category called digital commodities. In doing so, it explicitly removes collectibles, virtual land, merchandise, and video game assets from that category. Collectibles, virtual land, merch, and video game assets. I hate to be the first one to tell you, but the metaverse is coming back. The metaverse is coming back, ladies and gentlemen. The metaverse is coming back with this type of language. Virtual land, collectibles, merch. An OG asset in this space in the form of Decentraland is still working on VR gaming. I thought this company was non-existent, but they have still been working and developing that virtual world, that Decentraland. When Decentraland and other assets like it were at the top of the card, so to speak, everyone was talking about them, they started to get brand deals with banks, entertainment companies, airline companies, grocery stores, sneaker companies, like it was about to pop off. The problem was there wasn't any regulatory clarity. The only thing that killed the 2021 bull run was a lack of regulatory clarity. Now we are in another bull run, the run of 24. I call it the run of 24. This is when this all got kick-started after the halving of 24. But now that we are in the run of 24, if you want the run of 25, and we're getting clarity, be expecting the exact opposite to happen, where when we were told we weren't going to get it in 2021, market crashed. We're getting it now, and the bull run hasn't even started yet. To reiterate here, for better understanding, the Clarity Act amends Section 1A of the Commodity Exchange Act to define a new category called digital commodities. This removes collectibles, virtual land, merchandise, and video game assets from that category. This means the gaming ecosystem is about to explode, ladies and gentlemen. Just like the payment space. We're looking at the Cambrian moment for crypto. Now, as they extrapolate a bit further here, and I like these details as well, this means studios will be able to tokenize skins, gear, currencies, and player-owned economies with more confidence, ladies and gentlemen. I'm playing a game now. I just picked up Gears 5. Okay, I know it came out a few years ago. All right, but don't knock me. But I'm playing Gears 5, and I love how much they have improved in the series. Okay, yeah, I like that too. But there are certain in-game items, and as I'm using these items, I'm just thinking, I'm upgrading these things, and I'm like, this is where Web3 is going to get off at. Okay, major titles like a Gears, Call of Duty, Fortnite, hell, include Roblox in this conversation. They now have a way to take the assets generated in their games and put an economic value behind them. In order for them to do that, they're going to need external networks. It's the exact same principle that we're watching unfold in the payment space, where traditional payment companies want to get involved with faster, cheaper cross-border payments, but they don't have the existing infrastructure to do so. What are they doing? They're coming to blockchain networks, and they're leveraging their technology to create their own offerings. We will see the exact same thing happen in the blockchain gaming space. I promise you that. And now these bills, the bills just, to me, confirmed everything. It confirmed everything. Like I said at the top of the show, I 100% feel safe in telling anyone you can build a life savings in crypto, because from this day forward, there's no stopping us. There's no stopping us, ladies and gentlemen. Now, all of this, of course, is dependent on how today's events go. And as usual, I will let you know. Keep your eyes on the community tab as well as X for any updates on those. And with that, guys, yeah, I believe that's everything that I have for today's show. I wanted to keep it light today. Today is Friday. I was just reading over here, co-founder Sky Mavis comments. These are other major players in the space. It will take some time, but now I feel like I do have to prepare more definitive list. More definitive list. Things are just getting good here, folks. Things are just getting good. And if you're new to the crypto space, man, I want to welcome you. So, With that, guys, I'm gonna get out your ear. If you made it this far, drop DHN down in the comments so I know who's rocking with me. And as always, remember, if that money is digital, so is the hustle.